What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol WISH for ContextLogic Inc. This is Wish, the online fulfillment company. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Of course, this will be more of an update. We did cover this one yesterday based on the earnings announcement, and how would that plan have panned out, right? If we do something like this, turn our extended hours on, and just zoom in here a bit. According to our plan, what we were looking for was the open as well as the pre-market low, right? And when you know those two things, you can make a very educated decision. So we opened here, we drove lower as noted by this lower wick. We failed to take out the overnight low, so what should you be thinking? Well, your long is if we trade back up through the opening print, you take it long to start to fill the gap up towards that 888, and that's exactly what we got on today's open. So the plan worked according to the rules, okay? So what can we do about this going forward? If you're still long, fantastic. Just use a stop loss. We'll talk about where that should go in just a moment here, but let's clean up the chart, turn those extended hours off, and focus on today's trading session really. So doing something like this, so you can see it on this right-hand side. If we break out our Fibonacci's, which is always what we know we like to do, and do something like this from the low of the move to the high, I'm going to drag it to the left so you can see the numbers. So the 38.2 is here, and we know that we never really got strong acceptance underneath. So for me, ideal consolidation is remaining in this range. Take the break up and over 786 if you're not already long, or maybe add to your long if we get that break to start to fill the gap up towards first 888, and then the gap completely closes at 933, right? So that's the long trade up next if we get that consolidation. From a daily perspective, if it happens over multiple days, what that might look like is something like this, right? If we form a inside doji up here, some sort of hammer candle that has a little lower wick, little upper wick, basically any sort of consolidation with a pressure cooker top in place here, you take the break up and over to, again, retarget those areas which we just discussed. After that, you have 977, all those other daily levels from yesterday's video. For now, what I want to point out to the downside, though, is that today needs to hold, like today's low is the low on the stock. If we start trading under 670, I could see this potentially just fading off and, not really moving much higher. Of course, this glaring downtrend is not so friendly, so we don't want to see that happen. But again, if we violate today's low, it's just another reason for sellers to continue to pile this thing lower and lower and lower. So keep in mind that that's the line in the sand. We have the 38.2, which just roughly is above the 735. For just round number sake, I would use that area there. So any consolidation up here strikes me as healthy, taking the break to move up and over. If it starts to violate 735, I would not add to the position if it comes down to 670. Rather monitor very, very closely to see if it breaks and we get that downward dribble, or if it starts to show signs of reversal. If it does reverse, then again, your add is still over the top if you are already long to start to fill the remainder of the gap. So if you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, we wish you a green trading week.